Zelensky addressing U.S. Congress tomorrow morning. It will be a plea for aid. What specifically does he want from the United States?
So I think at this point, there's still a question of what is going to happen with some of those older fighter jets that Ukrainians are trained and able to use, and sort of how to get them over there, as well as additional weapon systems. We'll see also about additional humanitarian aid. I mean, Congress did just approve, I think it was a $12 billion piece of legislation, including humanitarian aid and military aid. But House Speaker Nancy Pelosi kind of suggested that that could just be the start, that more might be needed. And once again, this is an issue, it's very bipartisan. The speech tomorrow is going to be attended by Democrats, by Republicans, by the House, by the Senate. This is something, if you look and sort of listen to what members are saying, there's a lot of unity here on this issue during a time that almost everything in Washington is very partisan.
And Emily, in terms of, the U.S. providing aid, one of the most read stories on the terminal today is about Ukraine's anti-tank missiles. And included in this story is, a description of what's been dubbed the Saint Javelin, that is referring to U.S.-made weapons. I mean, give us some perspective here. How, in terms of, weapons and missiles, how much is the U.S. actually sending to Ukraine?
We don't actually have a solid number of how many of the anti-tank weapons that the U.S. has sent, but we know that they've been doing this in concert with allies. That Germany has sent them, Norway has sent them, Sweden has sent them. And you've seen experts say that, this is a really breathtaking amount of arsenal that Ukraine has, and that it might really sort of help them be able to get an upper hand in this war that they are in with Russia. And I think you've seen a lot of willingness for lawmakers that they've seen that you can send weapons over there. That's not going to escalate things to the point where the U.S. military is going to be involved in the conflict. And I think a lot of lawmakers see it as a way to continue to support Ukraine. And, it's not just lawmakers, it's also the American people. There was a sort of a poll about gas prices. Obviously, it's something that's been rising in the U.S., something that most Americans do not like. But when it was kind of framed as, hey, you're going to have higher gas prices because of some of the sanctions we're putting on Russia and their oil and their energy, you saw a majority of Americans were in favor of it then.
Yeah, that was pretty remarkable survey research. Emily Wilkins, political reporter at Bloomberg Government. Emily, thank you for joining us. Emily joins us on the phone from Capitol Hill. Covering much more when it comes to Russia's invasion of Ukraine in just a few minutes. This is Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevik and Katie Greifeld live in the Bloomberg Interactive Broker Studio. In a couple minutes, we are going to be speaking all about Russia spiraling toward a $150 billion debt default nightmare. We're going to talk about today's big take. First, though, let's get a check of what's going on with markets. We are less than 90 minutes away from the close. Hey, Charlie Pellet.
Well, hello there, Tim Stenevik. And what is going on with crude oil? Stocks are rallying as oil tumbles. New York manufacturing data came in much weaker than expected. That is easing fears about more aggressive Fed tightening that could stifle economic growth, beaten down retailers, tech shares leading gains in the S&P 500. Indeed, the NASDAQ 100 index up now by 1.9%. NASDAQ Composite Index up 1.8%. S&P, to put this all in context, up 1.2%. S&P higher by 50 right now. The Dow up 351, up 1.1%. 10-years down 5/32, 10-year yield 2.15%. Spot gold down 1.5%, $19.22 the ounce. And West Texas Intermediate crude. Big story today in the oil patch. We've got crude down 6.6% right now. WTI 96.14 a barrel. Brent back below $100, 99.56 right now. Brent falling by 6.9%. Well, as for recent declines in the equity market, with the NASDAQ 100 index falling into a bear market, Liz Ann Saunders is chief investment strategist at Charles Schwab. And this morning she spoke with our Tom Keene on Bloomberg Surveillance.
So a lot of the weakness under the surface predated the invasion. It really traced back to the latter part of last year. And I don't think we get out of this mode anytime in the near future unless we get some miraculous, ceasefire and beneficial solution in Russia-Ukraine.
Sources tell Bloomberg pharmaceutical giant Pfizer and its partner BioNTech will seek emergency authorization for a second booster shot of their coronavirus vaccine for people 65 and older, an effort to bolster waning immunity that occurs several months after the first booster. Pfizer shares down 0.3%. Its German partner BioNTech, its ADR is down 4.5%. Checking some of the other vaccine names, AstraZeneca up 1.5%, Moderna out of Cambridge down 1.5%, J&J Johnson & Johnson up by 2.3%. Recapping, a rally underway on this Tuesday with the S&P up now by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, I told you we're going all in on Russia's invasion of Ukraine. It not just includes the latest from Ukraine and the international community's response, but also the economic impacts, not just in Ukraine and the world, but also what's going on in Russia. To that end, today's big take focuses on Russia spiraling toward a $150 billion debt default nightmare. This story, written by Eliza Ronalds-Hannon and a couple other of our colleagues. Eliza's high-yield and distressed debt credit reporter for Bloomberg News. She joins us on the phone from Boston. Eliza, what happens tomorrow to Russia's debt that becomes due?
Well, what happens tomorrow is a bit up in the air still. The big question has been the most immediate question has been one of technical default, really. So the Kremlin has outlawed or restricted abilities of the sovereign and other companies to pay foreign debt in the foreign currency, and any sort of payment made in rubles, which has been the order, would be a technical default. But what really investors are talking about at this point, if you ask them what their take is on the outcomes here, it's less. It's only a matter of time before the defaults become a matter of actual solvency as opposed to technical ability to pay, because Russia's completely cut off from its trading partners now, and revenue will dry up, cash will become non-existent.
And so let's dig into that. So the worst case scenario here, Russia defaults. What's at stake for Russia's economy if, it's then cut off from its trading partners? People, investors don't want to invest in its debt anymore.
Right. It will really be a negative feedback loop that will, as we said in the story, really set the economy on its on a road to disaster. You're seeing, part of the reason that people are pulling away from the debt is because of downgrades to the credit rating, which of course have to do with all of the event risk related to the invasion, but also the high inflation and the contracting economy. But because of the high inflation and contracting economy, and because of the debt downgrades, the economy fares even worse. And so it's really on a spiral.
Eliza, forgive me, but on the topic of Russia's invasion of Ukraine, we're just hearing from President Biden. He says that he will speak more about Ukraine on Wednesday. That's tomorrow. He did make some comments a moment ago saying that it's getting harder to get supplies into Ukraine. He's speaking right now at a federal government funding bill signing event. For more, just go to LiveGo on the Bloomberg terminal. Eliza, is this by design? What could happen to Russia, to Russia's economy, what could happen to Russia's debt? Is this partly by design when it comes to sanctions and cutting Russia off as much as the United States and the rest of the world can do?
Certainly, sanctions are designed to inflict pain, and this will be painful for Russia's economy and the state, the government. Of course, you're also looking at a lot of pain to be absorbed among global investors. Russian credit and corporate credit in Russia is quite widely held throughout funds all over the market because until recently, Russia was a big part of the index that many funds tracked. It was also investment grade rated. So it's the type of funds that aren't, very risk friendly, aren't necessarily, trying to make a big play on the outcome, but are really passive holders. And because of how fast everything unfolded, they didn't get a chance to sell and, let the distressed guys come in. They're really holding the bag still, even as stuff plummets in value.
Well, that's what I want to get into a little bit of, what the ripple effects could look like here. And, are there any potential contagion risks when it comes to, other emerging markets and their sovereign debt markets?
I think that if anything, investors who are pegged to an emerging market index or other indexes that involved Russia will in fact need to flock to other sovereign credits and other emerging markets in order to simply balance their portfolios because they did lose such a chunk of their benchmark overnight almost. So I don't know if there's so much contagion risk explicitly. It's a quite limited event. The risk of, similar counterparty problems with nearby or related countries isn't very far-reaching, at least. But what might be more interesting to look at in the immediate term is where investors go to put their money.
Eliza Ronalds-Hannon is one of the authors of today's Big Take. She's high yield and distressed credit reporter. You can read Eliza's story and more from Bloomberg, The Big Take. You can do that at Bloomberg.com and, of course, on the Bloomberg terminal. Thank you so much, Eliza. Let's get to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. President Biden will be traveling to Brussels next week to meet with NATO allies and to take part in a summit of European Union leaders as Russia presses on with its invasion of Ukraine.
His goal is to meet in person, face-to-face, with his European counterparts and talk about and assess where we are at this point in the conflict.
White House Press Secretary Jen Psaki says it's not clear if the president will travel to other countries or meet with Ukrainian President Volodymyr Zelensky. Zelensky today made a virtual appeal to Canada's parliament to do more for his country. He'll be talking virtually with members of the U.S. Congress tomorrow. NATO is warning Russia not to consider using chemical weapons in its campaign in Ukraine. NATO Secretary General Jens Stoltenberg says Russia could be planning to justify the use of chemical weapons with a false narrative, accusing Ukraine of developing and producing chemical weapons in biolabs.
Any use of chemical weapons will be a violation of international law, will be a violation of the ban or the treaty that bans chemical weapons, and Russia has signed to that convention.
Stoltenberg says NATO leaders will meet tomorrow to discuss whether additional troops will be sent to the border with Ukraine. The mayors of Washington, D.C. and New York City say a suspect has been arrested in connection with a rash of homeless shootings. 2 homeless people were killed, one in Washington, the other in New York, while 3 others were wounded. The suspect was apparently picked up overnight in a Washington neighborhood. Officials say ballistics evidence tied all the shootings. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Katie Greifeld live at the Bloomberg Interactive Broker Studios in New York. Katie, among the most read on the Bloomberg terminal this afternoon is a story by Peter Chapman about Amazon regulators, not here in the United States, though. This one about Amazon in the European Union.
Yeah, so we learned today that Amazon, it won unconditional approval from the European Union for its plan to buy MGM for $8.45 billion. The Blocks Commission said in an emailed statement that the deal poses no competition problems in the 27-nation EU. So there you go.
All right, well, the proliferation of streaming services, including new arrivals such as HBO Max and Disney Plus, it's put pressure on Amazon to acquire more programming. Amazon founder Jeff Bezos has made no secret of his desire to get into movies. MGM's vast backlog provides an abundance of streaming material, not to mention opportunity to mine the iconic James Bond and Rocky franchises for new films and TV shows. For years, Katie, as I've covered Amazon, a big part of the Amazon Prime instant video story was how is our content going to get people to buy more diapers on Amazon? And the idea for many years was to get more and more people to subscribe to Amazon Prime, because its consumer intelligence research partners, a small firm in Chicago, has shown for years, people who are Prime members, they buy more expensive items on Amazon, they shop more frequently, and they just buy more stuff.
I believe it. I actually went the other way. I mean, I use Amazon for just about everything. I don't go to stores. But then I realized I could also buy movies on Amazon.
So do you actually buy them, or do you watch them for free on the streaming platform?
I actually buy them. I mean, it's a little bit of both.
Yeah, so those are the newer movies, right?
The newer, I bought The Notebook, which is pretty old at this point.
That is an old one.
I know. You
Still
got to
never
watch
seen
it
it, but I
every
guess
6
it's a
months or
classic,
so.
right?
Just have a good cry. But in any case, Amazon is obviously pleased about this. They said in an emailed statement that they look forward to providing more choice of quality entertainment for viewers.
Okay, well, now you can go get the old James Bond stuff on there as well. Soon, I guess. You're listening to Bloomberg Radio, and this is Bloomberg Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 index just about the highs of the day right now. The Dow holding on to its gains. NASDAQ and the NASDAQ 100 index both rallying as well. Retailers, tech shares leading gains in the S&P while the NASDAQ 100 is outperforming. Let's begin there. That index up right now by 2.35%. The NASDAQ Composite Index up 266 points, up 2.1%. S&P's up 67, higher by 1.6%, and the Dow up 480 now, higher by 1.5%. Stocks are rallying as oil remains lower, while New York manufacturing data came in much weaker than expected, easing fears about more aggressive Federal Reserve tightening that could stifle economic growth. We will be getting the Fed rate decision 2 o'clock tomorrow, Wall Street time, and of course, Jay Powell's news conference live on Bloomberg Radio kicks off at 2:30 Wall Street time. Crude, a major story today. West Texas Intermediate now at 95.43 a barrel, dropping today by 7.4%. Brent now with a 98 handle, lower by 7.6%, 98.75 on Brent, the global benchmark. Among the names reporting after the closing bell today, we will be hearing from Lennar, up 2.2% right now. Williams-Sonoma, WSM on the ticker there, up 1.8%. And Gap, Guess, had to guess on that one, up by 4.7%. Again, recapping, stocks higher, S&P up now by 1.6%, 10-year yield 2.15%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, coming up in the upcoming issue of Bloomberg Business Week magazine is a deep dive into Cerebral. Maybe you've heard of it, maybe you haven't. It's backed by SoftBank. It's promoted by Simone Biles. The CEO has actually even been on our air here on Bloomberg Business Week magazine. Cerebral has built the fastest growing online mental health business. Former employees, though, say the rapid expansion comes at the expense of patient care. The story by Pauly Mosens and Caleb Melby. Caleb Melby is financial investigations reporter for Bloomberg News. He joins us on the phone from Brooklyn. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio in New York. Joel, I want to start with people, for people who haven't heard of Cerebral. What is it?
Well, first of all, this story's in the current issue.
Oh, in the current. Excuse me.
What
Thank
is
you.
time? What is time?
What is time? It's a flat circle.
Cerebral, if you're on TikTok, you will definitely know it. I've been fed the ads on Instagram, and it's basically a telehealth company that during the pandemic, there were some policy changes that suddenly allowed you to get ADHD medications without having in-person appointments. And Cerebral, startup, very young, has been a huge beneficiary of these policy changes, and it has basically accelerated into this mental health crisis by allowing people to have telehealth appointments and get prescriptions, basically, almost on demand and via online prescriptions as well, depending on which state you're in. But there's a downside to all this too, which is all of a sudden we're dealing with mental health issues and telehealth, and you don't have those normal check-ins that most of the time we've had. And in talking to employees and former employees and patients of Cerebral, Pauly and Caleb found some troubling elements of their business practices. So break that down, Caleb. What were the big takeaways that you found as you did a bit of an autopsy here?
Yeah, the ADHD medication point you highlight, Joel, is definitely among the big ones. Basically, prior to the COVID-19 pandemic, you weren't able to prescribe controlled substances in a telehealth setting. And that was the product of a 2008 law called the Ryan-Haight Act, which said you couldn't issue controlled substances, and that includes amphetamines like Adderall and also benzos like Xanax and Klonopin. So for the first time, companies could do that, and there's been a race to do that. As you can imagine, a lot of people working from home, going to school from home, sitting behind computers all day, not getting to socialize. They've become distracted. They've become irritated. They're procrastinating, which are all symptoms potentially of ADHD or, a myriad other things, including
just my life,
burnout.
Yeah, and we've all been there, right?
Exactly. So that kind of supply side drummed up. You have companies like Cerebral meeting that with these ads that Joel was describing that, can be quite aggressive, I think it's fair to say, like people dancing with boxes of pills and similar, and essentially asking, have you ever thought that you might have ADHD? So we talked to nurses who worked for this company who, once that business line got up and running, so this deluge of clients looking for ADHD medication and the strictures under which they were asked to operate. Half an hour primary appointment. People expect the drugs after that first appointment because that's kind of what they've been led to believe by these ads. They get irate if they don't. And they say it's very hard to diagnose in a virtual setting in half an hour.
And what kind of response did they, have employees had when dealing in these situations, and then also the customers that you spoke with?
Yeah. So for employees, a lot of the folks who left, you could almost think of them as conscientious objectors. They saw kind of all these pressures on their prescribing practices. And for some of them, they didn't consider it worth it to continue to work under those circumstances. Some described fear of losing their licenses because of the situations they were put in, et cetera. So they often moved on. There's a whole host of support staff who, felt unsupported as the company's profile skyrocketed. It doubled its valuation alone from, quadrupled it from June to December of last year to $4.8 billion, basically unable to keep up with this demand. And patient experience varies widely. Some people really need more tender, loving care than they can get under this kind of touch and go environment, and felt like they didn't get it. We talked to somebody who, her first 3 appointments averaged 19 minutes each when she joined the service. And for other people, and these are people who are either geographically remote or, are uninsured, they can have positive experiences. If you have a prescription already and you can't get it filled and you need somebody to refill it and you live, far away from, a psychiatrist or other psychiatric prescriber, this can be a huge opportunity for you.
Yeah, it's also a big question, I think, for what regulators are going to think moving forward. We only have 20 seconds left, Caleb, but what can you tell us about the way that regulators are potentially looking at this?
Look, telehealth has been seen as a huge boon. I think that continues to be the predominant narrative. I think they're going to try to find a way to try to make sure that people are able to do this in the future.
A really important story. Caleb Melby is financial investigations reporter for Bloomberg News. He joins us on the phone from Brooklyn. Joel Weber, editor at Bloomberg Businessweek, with us in the Bloomberg Interactive Broker Studio. Check out the story. It is in the current issue of Bloomberg Businessweek magazine. You can read it now on the Bloomberg terminal and at bloomberg.com/businessweek. March is Women's History Month, and every day this month we are celebrating significant moments in women's history. Now with your installment for Tuesday, March 15th, here's Bloomberg's Renita Young.
On this day in women's history in 1946, former First Lady Eleanor Roosevelt is appointed U.S. Representative to the United Nations. President Harry Truman appointed her. Roosevelt contributed greatly to UN policymaking, serving as chair of the Human Rights Commission. She was the only woman serving on the 6-person delegation that would eventually produce the Universal Declaration of Human Rights in December 1948. Now, because of Roosevelt's massive contributions to international human rights and law, President Truman would later call her the First Lady of the World. Roosevelt served in this position until 1952. That's today in women's history. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for that update in women's history. Some breaking news. Sarah Bloom Raskin has withdrawn her nomination to the Federal Reserve Board. That's according to New Yorker. This is Bloomberg Radio.
close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left in the trading session on this Tuesday. Romaine Bostick, Taylor Riggs, Gina Martin-Adams riding shotgun with us today. And joining us now, our colleagues on Bloomberg Radio, Tim Stenovic and Katie Greifeld in for Carol Masser. We welcome in our audiences across Bloomberg TV, radio, and YouTube. An interesting day here, I guess, a big bounce, but we've seen this bounce before, guys. Big question is, does it stick?
Yeah, does it stick? Is it sustainable? After all, yesterday, the S&P 500 did hit its lowest level since May of 2021. I got my eye on airline stocks today. You know, we've covered them a lot here over the last few weeks, and year to date, they've certainly been getting beat up, but they're having a really great day. Carriers like United Airlines, American Airlines, they cut their capacity forecast according to regulatory filings. Airlines, some of them also boosting their revenue expectations, citing travel demand. Falling oil prices, they don't hurt either.
Yeah, and I mean, they don't hurt if you're an airline, but if you're in energy company not doing so hot, you can see the energy sector. It's actually the only sector in the red today. It's pretty broad-based rally, except for those energy stocks.
All right, well, we talk about sort of what's happening here at 42.47 on the S&P 500, not far here off the highs of the day. The NASDAQ composite indices up basically 2% on the day across the board. You're seeing a little bit of action in the Russell 2000, not quite as strong here, up about 0.9%, and the transport stocks largely higher on the day on the back of those airline moves.
Take a look at some of the individual sort of sector levels that we do as well as we dive one deep down from the S&P 500. And goodness, Romaine, sort of a reversal of where we were yesterday, right? It's consumer discretionary, it's technology, even staples, as you think about those companies who maybe can or cannot pass on some of those inflationary costs to the consumer. Those are all up more than 2% on the day. Energy, though, this is similar to yesterday. Second day in a row, taking a leg lower. You're now only up less than 30% year to date. Remember, on energy at one point this year, it was looking like 35% gains year to date. Unbelievable.
Yeah, unbelievable here. Tech stocks obviously leading the charge, and some of those discretionary names. Apple, which yesterday closed back below that 200-day moving average for the first time since June, back above it, up about 2.6% here on the day. United Airlines up almost 8%. That's pretty much the story for most of the airlines out there. And a couple of idiosyncratic stories here. Keep an eye on Big Lots. Those shares actually spiked just about an hour or so ago. We're learning that Mill Road Management taking an activist stake in the company and advocating for a potential sale to boost shareholder value. Those shares now up 13% on the day. And look at this. We actually haven't had any real IPO activity the last couple of weeks because of the war in Ukraine. We had one today, Aconda Corp. It's a marijuana cannabis company, I should say. It sold at $4 a share. It got as high as $30 on the day. It's right now trading at $11 a share, up 175%. That's a pretty good debut.
Yeah.
You could say that again.
So. And I wonder, I mean, Gina Martin-Adams, I mean, you're here with us, and I mean, I am curious just about sentiment, market sentiment overall here, because one of the reasons why we hadn't seen a lot of activity is who wanted to be a part of this market right now?
Yeah, I agree. It was a really rough day yesterday, but people seem to be jumping back in today. And intriguingly, the leadership does tend to be skewed toward longer duration or higher duration stocks, which would be normally more sensitive to a Fed funds increase. But as my next chart shows, we are very clearly going to see the federal funds rate go higher. The Taylor rule, which you can look at on your terminal using Taylor Go, effectively, shows that
not Taylor Riggs,
but the Taylor rule. She may have had a hand in this. Nonetheless, it does show that the Fed is so far behind the curve, farther behind the curve than at any point in the last 40 years, in fact. The Taylor rule says that the current combination of employment conditions as well as inflation would imply that Fed funds rate, which is currently at 0, needs to be at 10 percentage points.
Wow.
Even with the forecast implied by the consensus for slower growth, a little bit of inflation reprieve, it should be closer to 6, and we're at 0. So we are most certainly going to get some Fed funds target rate increases over the course of the next year. How much of that is already priced into stocks is still a very big question mark. We'll see how the market reacts tomorrow.
That would be a Volcker moment if they took us up.
Yeah, I don't think they're going to 10. We can rest assured on that, but 25 is almost certain.
Hey, so I was interested in something that I saw earlier on Bloomberg TV today. Mike Novogratz, the Galaxy Digital founder and CEO, he was on Bloomberg Crypto. Kaylee Lyons asked him all about how money may never be the same after the war in Ukraine. Check out what he had to say.
I think the biggest thing that's happened in the last 10 years in lots of ways, maybe longer, is when Europe, the U.S. said, hey, Russia, those reserves that you thought were yours, they're not really your reserves. So what does that mean? It means the dollar or treasuries as a risk-free asset isn't so risk-free. It's not risk-free if you're Russian, and maybe if you're Chinese, you're like, might not be risk-free either.
That was Mike Novogratz, Galaxy Digital founder and CEO, saying the dollar and treasuries aren't as risk-free as we thought. Taylor Riggs, you talk about the full faith and credit of the U.S. government time and time again, but what do you make of what Novogratz said?
Yeah, that's a really interesting point. I don't think Tim, and I'm hardly the expert on this, no one is doubting full faith and credit of, well, I guess it used to be a AAA, still in some rating agencies' minds a AAA credit. But you actually bring up a good point. We were having this conversation, and Gina, you can weigh in here too, with Sherry On, when we were talking about the Saudis buying, China buying oil from the Saudis and denominating it in yuans instead of dollars. Now, more symbolic, doesn't really impact, but you're thinking about the reserve currency being the dollar and conversations, and for now, very much just conversations, but in the next 30 years, what does that look like?
Well, and I think the important point to consider is, well, if these are not risk-free assets, what is? I think the competitive landscape is still definitely favoring these as the risk-free benchmarks. And until you get to a point where the competitive landscape changes, certainly it's a stretch to suggest that crypto is a risk-free asset right now, considering just the volatility in that currency and sort of the lack of underlying bulk behind it. When you talk about full faith and credit, where's the full faith and credit behind crypto is a big question for investors. So we've got to have something that comes along that can replace that risk-free nature. And we just haven't gotten there.
And Gina, I mean, that's the point I would make too. I mean, I reported on currencies for years, and this was a question people always like to talk about, you know, at what point does the dollar lose its reserve status? But I mean, you don't have a lot of options. You know, the euro has its own problems. Chinese yuan has its own problems. Bitcoin, I don't know. I think we're a long way away from any developed market central bank buying Bitcoin.
Yeah, and I'm glad, just real quick, I'm glad you brought up the euro, because remember there was all the talk that that would become the new reserve currency, and we saw just how long of a road it's been for the euro. So if the euro couldn't do that, what makes you think the yuan's going to do that anytime soon? And what makes you think that Bitcoin, no offense to all the Bitcoin folks out there, is going to do that anytime soon?
All right, we are going to have to leave it there, at least for right now. No offense, Katie, okay? That is going to do it for our cross-platform coverage. We are going to be back here, though, in less than an hour to count you down to the close for Beyond the Bell on Bloomberg Radio, Bloomberg Television, and on YouTube. See you in a bit.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers Studio in New York. I want to continue what you were saying, Katie, about the discussion when it comes to reserve currency. I think that Mike Novogratz of Galaxy Digital made a really good point. But at the same time, like you said, and like Gina Martin Adams of Bloomberg Intelligence just said, we see too much volatility when it comes to Bitcoin to actually be a reserve currency of the world.
And, you know,
far too much.
I can't remember who made this point. I saw someone say it on Twitter. But, you know, if you think about what central banks hold, they hold, you know, obviously a mix of currencies from other nations. They also hold gold. So if you're looking for a new reserve asset, they're probably more likely to continue and increase their buying of gold than they are to break completely new ground and buy crypto, which would be extremely dramatic.
Like actual gold.
Actual physical gold that's held in vaults underground.
I know, I've been to the one at the New York Federal Reserve.
Oh my gosh, so exactly. And there's also a huge one underground beneath London.
Have you been to that one?
No, but I've heard about it.
I went to the one in New York, and you know, they didn't let us take pictures.
No, and I've talked to people who've been to the London Gold Vault. Apparently they literally blindfold you so you can't see how you get in. It's top secret.
It's underground, right?
It's underground, but they don't even want you to like see the tunnels that you're in.
Yeah, it is going to be interesting to see how you know, how this develops when we do think in the context of what is the reserve currency of the world. I think Romaine brought up a really good point in their discussion with Sherry On earlier when it comes to actually buying oil in the yuan rather than in dollars.
Yeah, and I mean, we'll see if that picks up, but it was interesting to see that headline this morning.
Well, let's get a check of the latest world and national news. We go from New York to Washington, D.C. Nancy Lyons is standing by in the D.C. newsroom. Hey there, Nance.
Thanks, Tim. President Biden has signed the omnibus spending bill. It includes nearly $14 billion in additional assistance to Ukraine, and the president will be traveling to Europe next week to meet with NATO allies and to take part in a summit of European Union leaders as Russia continues attacking Ukraine. At the signing event today, President Biden said he would have more to say about Ukraine tomorrow. There are other problems developing for Russia as the war fails to go according to plan. Bloomberg's Irv Chapman reports the country is heading toward a default on its bonds, unable to pay interest in dollars as its sanction-ridden economy craters.
Russia's political future and Vladimir Putin's is more unpredictable today than it's been almost since the Soviet Union collapsed, former Ambassador Steve Sestanovich said in a Bloomberg interview.
He's got a military offensive that is stalling. The economic elite panicked about what is going to happen to their position. The intelligentsia depressed and speaking out, and every indication that Western governments are going to be united. Russian leaders are not rewarded for failure.
Sestanovich said the military and state security leadership has also been tarnished by the Ukraine war. In Washington, Irv Chapman, Bloomberg Radio.
Drug maker Pfizer is expected to request authorization this week, maybe even today, for an additional COVID-19 booster for seniors. That's according to people familiar with the situation. The FDA would have to review the data, apparently coming out of Israel, where a fourth shot has been authorized for a broader group. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks so much for that update, Nancy Lyons, Tim Stenevec, and Katie Greifeld. We are live in the Bloomberg Interactive Broker Studios in New York. Katie, we were just talking about this, the story among the most read on the Bloomberg terminal. The yuan jumping after a report on Saudis weighing its use in oil deals. So what happened here?
So this is a report by Dow Jones that you have Saudi Arabia in active talks with Beijing to price some of its oil sales to China in China's currency, which would be a dramatic move. I mean, most of international trade is denominated in dollars. That's, a big reason why it's the reserve currency of the world. But news and actions such as this chip away at that a little bit.
Yeah, the talks with China over yuan-priced oil contracts have been off and on for 6 years, but have accelerated this year as the Saudis have grown increasingly unhappy with decades-old U.S. security commitments to defend the kingdom. That's according to Dow Jones, who cited people familiar with the matter. The offshore yuan erased a loss of as much as 0.3%, trading slightly stronger at $6.39. Or sorry, excuse me, trading slightly stronger at 6.39 per dollar.
And there was no indication in this report on the actual likelihood of, Saudi Arabia making the switch, nor how much of its sales might be denominated in yuan if it were to make the change. But it does signal that the conversation around alternatives to the U.S. dollar is very much a live debate right now, Tim.
Well, so let's go back to this debate. You said it won't be euros. It's unlikely to be euros. And why is that?
It won't be euros because if you think about how the European area is structured, there's no singular bond. There's not like a euro bond in the same way that there are treasuries. So that makes it difficult for central banks to acquire a lot of those assets at once. You have German bonds, then you have Italian debt, you have UK debt. There's not just one single asset when it comes to the European debt market.
So up to now, the U.S. still the reserve currency and still what most trade is dominated in.
Absolutely.
Until
I'm looking
Bitcoin.
at SWIFT. The U.S. dollar share of payments via SWIFT right now is about 40%.
This is Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Sources tell Bloomberg Sarah Bloom Raskin has withdrawn as President Biden's nominee to be the Federal Reserve's vice chair of supervision. This after it became clear she did not have the votes to be confirmed. Now, let's head over to the First Word breaking news desk for today's afternoon call. Here is Bill Maloney.
And good afternoon, Charlie. An aggressive bid for the main U.S. averages today, with the Dow currently up 619 points. S&P's gained 85, while the NASDAQ is higher by 326. The U.S. 10-year yield at 2.16%. Gold is down 30. Oil is also sinking, but Bitcoin is trading higher by 2.3%. Among the main 11 S&P sectors, just energy was in the red, and leaders to the upside in the Dow, Disney, Procter & Gamble, and McDonald's, while only Chevron and Dow Inc. fell. In other news, Big Lots surged after Mill Road Capital suggested the sale of the company, and the SEC is probing potential violations at the Big Four accounting firms. Wrapping things up, Google Domains is out of beta, and that sent GoDaddy shares down as much as 6.2%. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, thank you, Bill. To hear live breaking news over your Bloomberg Times Squawk, SQUAWK on your terminal, and that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, I said we'd spend the second hour of our program this afternoon going all in on the Fed. That is absolutely true. Of course, tomorrow we do hear from Federal Reserve Chair Jay Powell, his press conference, the comments from the meeting that kicked off today. Dr. Stephen Skanke is Chief Economic Advisor at Keel Point. He's also a former U.S. Treasury and White House National Security Council staff member. Dr. Skanke joins us on the phone from Cape Canaveral, Florida. Dr. Skanke, how are you?
I'm well today, thanks, and it's great to be with you.
Yeah, good to be with you, too. Before we get to what the Fed is going to do, I do want to talk Russia and Russia's invasion of Ukraine with you, because we haven't had a chance to speak about that since you were last on our program. And you were on the White House National Security Council, a staff member of the White House National Security Council. So I wanted to get your read on it. It's a humanitarian crisis with more than 2 million refugees fleeing Ukraine, and it's not clear that there is any end in sight. How are you reading into it?
Well, it's an extraordinary human tragedy, and also a tragedy for the geopolitical world order. Everyone had thought that we had gotten beyond invasion and land wars in Europe in particular as we came into this century, having experienced 100 million lost lives in the 20th century as a result of conflict like this. So that is surprising. What's been amazing about it, though, is that it really has awakened our European and Asian allies to the real threat to the geopolitical and economic system as a result of this. What's happened in Germany and the 27 EU countries has been absolutely amazing in terms of their recognition of the jeopardy and the things that they need to do to get that turned around for their own benefit and for the safety and security of their own countries.
And Dr. Skanke, I feel like it also has awakened many people to just how important Russia and Ukraine and that entire region is to, supplying the world with energy and, producing food and grains for the entire world. I mean, it feels like everything physical, the price of it has just soared in the past few weeks. And I mean, to bring it back to the economy, I'm curious what you think the lasting read-through to inflation could be, because it was right around this time where that economists had initially predicted that inflation would finally start to crest a little bit.
That's right, Katie. But Russia exports 7.5% of crude and refined products before the war in what was already a tight energy market. And so to think about taking any or all of that offline is startling and jarring. Hence the Biden administration's effort to do something with countries that are already otherwise offline and to get production geared up in the United States. All of which takes time and all of which takes infrastructure to get it repositioned into the countries in Europe that need it. Likewise on grains, Russia and Ukraine produce 23% of the world's wheat supply, a significant amount, and not something that you change overnight. Fortunately, the U.S. is an agricultural powerhouse and has the ability to turn its attention to replacing some of that, but over time only. And in the meantime, you have to depend on the stocks that are there. Aluminum, the same way. Big producer and exporter of aluminum. And of course, natural gas to Europe. Much harder to replace because the infrastructure for regasification of exports from the United States just takes time to put in place.
So, Dr. Skinke, get us to tomorrow and what you expect we'll hear from Fed Chair Jay Powell. Widely expected that they announce an interest rate increase of 25 basis points. That seems to be priced in at this point and widely agreed upon. But what surprises could we see?
I think the big surprise will come in what they say about the trajectory after this. There's been a certain amount of public commentary since the January FOMC meeting with some misunderstanding as to what was said and some expectations that they need to go faster. But I think Chairman Powell was perceiving this and stepping out to try to calm markets and set expectations that they're going to move deliberately as we go along on this, fully understanding that the impact of what's happening in Russia and the Ukraine is really hard to parse through the system right now, and what financial markets and even the political system in the United States, what it needs right now is just stability, predictability. But the big surprises will come in their discussion about when does quantitative tightening begin and what does the dot plot look like for the increase in interest rates going forward through the rest of the year. The market's been calling for between 7 and 9.25% increases. The Fed has been saying 4 or 5, but we'll find out soon enough as to where their thinking has moved, just as a result of what's happened over the last couple of weeks.
Dr. Stephen Skanke, it is always great to chat with you ahead of Fed Day, Chief Economic Advisor at Keel Point, also former U.S. Treasury and White House National Security Council member Stephen Skanke joining us on the phone from Cape Canaveral, Florida. This is Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Katie Greifeld live in the Bloomberg Interactive Broker Studios in New York. When we were doing our countdown to the close, Katie, I referenced the JETS ETF, which is made up of many airlines, particularly those here in the United States that are surging today. It's what Kriti Gupta has got her eye on. She's going to be joining us in just a few minutes to give us all of those details. First, though, less than a half hour away from the market close on this Tuesday afternoon. Let's get an update. Here's Charlie Pellet.
All right, I thank you very much, Tim Stenovec. Best level of the day right now with the Dow, the S&P, NASDAQ all rallying. 28 minutes to go ahead of the closing bell. Do want to begin with a developing story this afternoon. Source telling Bloomberg, Sarah Bloom Raskin has withdrawn as President Biden's nominee to be the Federal Reserve's vice chair of supervision after it became clear she did not have the votes to be confirmed. Stocks are rallying as oil tumbles, and New York manufacturing data did come in much weaker than expected, easing fears about more aggressive Fed tightening that could stifle economic growth. Fed policymakers are meeting right now. We will get the decision tomorrow, 2 o'clock Wall Street time, as you have come to expect over the years. Complete, insightful coverage right here on Bloomberg. And yes, we will have Jay Powell's news conference for you live at 2:30 Wall Street time. Oil's rallied deflated with renewed hopes of an Iran nuclear deal, while a resurgence of COVID lockdowns in China pose risks to demand. Futures are now at the lowest since the war in Ukraine began. West Texas Intermediate crude down 6.7%, 96.07 a barrel. A barrel of Brent below $100, 99.33, down now by 7.1%. As for what's driving the sell-off, Caterina Simonetti is Senior Vice President at Morgan Stanley.
Investors are concerned about the growth, concerned about inflation, concerned about the Fed action. And in this context, the lower oil prices will be a good thing. But would we have to really question if this move today, is it a permanent move? Is it something that, if anything can be permanent in this market, of course, is something that can stay here for some time, or is this just the move of the day?
Well, we do have oil stocks moving lower on the slide in crude today. Airline stocks are higher. Kriti will have more on that in a moment. But ExxonMobil among some of the oil names down now by 5.4%. We've got BP up 0.9%. Chevron down 5.2%. EOG Resources down 1.7%. Pioneer Natural down by 0.4%. Equity markets higher across the board with the S&P up 91, up 2.2%. The Dow up 636, up 1.9%. NASDAQ up 2.9%, 10-year yield 2.14%, spot gold down 1.7%, 19.18 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Tim Stenovec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. Katie, tomorrow we hear from Fed Chair Jay Powell and the entire Federal Reserve with a policy decision that's happening at 2 p.m. Wall Street time. We will bring that to you live, of course, when we get it. Your expectations, you and I co-anchor a show, Quick Take Stock, on
We do.
Bloomberg Quick Take at noon Wall Street time each and every day. We've been all in on the Fed. We're going all in on the Fed tomorrow with a special. But I'm wondering, as far as expectations go, what could be surprising in your opinion?
Oh, man. I mean, I'm looking at, obviously, the big surprise would be a 50 basis point hike. That has been completely priced out. But I don't know, a month ago, it was the topic of conversation. So that would be number one biggest surprise. I'm also curious to hear about the balance sheet and what their plans for it are. I mean, we got into that a little bit with Dr.
Steve Skanke.
Yeah, about what we know that they're going to stop buying bonds. When do they start actually reducing their holdings?
They supposedly did stop buying bonds.
Supposedly. I mean, but in terms of, the yield curve, the flattening that we're seeing, you have seen some big shops come out and say they should be selling their long-dated treasuries. That's how you take some of the pressure off the yield curve. But
and that's what Steve was looking for, right? When that quantitative tightening starts. Let's get to Kriti Gupta, because each and every day at this time, she joins us with her chart of the day and what she's got her eye on. If you want Kriti's chart of the day, you can sign up. You just send her an email at kgupta129@bloomberg.net. Also, check her out on social media, Twitter and Instagram at Kriti Gupta News. Kriti, we are talking airlines this afternoon because a little bit of a reversal for the trend that we've seen in airline stocks today. What's going on?
Yeah, they're actually the best performers when you're talking about individual stocks. And this really started this morning with Delta Airlines coming out and saying that their revenue or their kind of return to passenger flights was essentially at 78% of 2019 levels. That is huge because that comes from a previous number of 72 to 76%. So you are seeing this recovery in the airline space, but it's not just that you see Delta, United, American Airlines kind of thriving here. It's also the fact that we have lower oil costs. And the reason this is so significant is because airlines tend to hedge against jet fuel costs because they are such big consumers. They like to lock in prices, but they haven't actually done that. I believe Southwest and Alaska Airlines are the only two who've done it. And that's a really big deal because now they're far more exposed to the volatility in the markets. And as we know, oil prices have just gone up and up and up. And a lot of these airlines are not prepared for that. And so nevertheless, when you do see oil prices drop like they did today, airlines get an extra boost.
Something that always confuses me when we talk about this is, like you said, airlines have to lock in costs. Does it make sense that airlines intraday, the stocks are so tied to the price of oil?
They are and they're not. So they are right now because there's extra sensitivity to it, but airlines broadly have tended to trade in line with oil because they were both kind of exposed to this cyclical exposure, this recovery trade altogether. But now there's this nuance where the airlines are kind of stuck in the middle of essentially a rock and a hard place. Pardon the fracking pun there.
I get it.
What's interesting is that, thank you, I'm really glad you did. But basically, on the one hand, they're kind of pulled and supposed to trade opposite to oil prices, similar to the rest of the market, the idea that a commodity shock, they're kind of insulated from it. But on the other hand, to your point, they are actually part of that cyclical trade. So you have seen a lot of volatility. And on top of that, if you just need an extra kind of reason for confusion when it comes to the airlines, is that a lot of these airlines are also volatility plays. So if you're betting that the S&P 500 is going to be super volatile in the next couple of months, then airlines are kind of that mechanism to do it through if you're looking through a specific stock in the market.
Okay, pricing power. We only have about 45 seconds with you left, but there's so much demand as the Omicron variant subsides, and fingers crossed we get out of this pandemic soon. How much does demand offset rising costs for airlines?
Not enough at the moment, and that's really the problem. But remember, a lot of these airlines haven't been profitable since the increase of or the onslaught of the COVID-19 pandemic. So they're trying to get travel back. They're trying to really offset those margins, but that's the problem you're going to see across sectors, the idea that those margin pressures just aren't going to be enough.
Kriti Gupta, Bloomberg Markets correspondent. Check out her chart of the day. If you want to get access to it, just send her an email, kgupta129@bloomberg.net. You can also check her out on Twitter and on Instagram. Follow her on social media. You can do that at Kriti Gupta News. Coming up in just a couple of minutes, we are driving to the close. We are doing that a little bit later with Liz Young, head of investment strategy at SoFi. First, though, a check of the latest world and national news. Standing by is Nancy Lyons. Hey there, Nance.
Hey, Tim. No new developments concerning ceasefire talks on the war in Ukraine. Today, Russian and Ukrainian negotiators held a fourth round of negotiations. Russian President Vladimir Putin says Ukraine's leadership is not being serious about resolving the conflict. Well, NATO is warning Russia not to consider using chemical weapons in its campaign in Ukraine. NATO Secretary General Jens Stoltenberg says Russia could be planning to justify the use of chemical weapons with a false narrative, accusing Ukraine of developing, producing chemical weapons in biolabs.
Any use of chemical weapons will be a violation of international law, will be a violation of the ban that, or the treaty that bans chemical weapons, and Russia has signed to that convention.
Stoltenberg says NATO leaders will be meeting tomorrow to discuss whether additional troops should be sent to the border with Ukraine. In a tit-for-tat move, Russia has introduced sanctions against U.S. officials, including President Biden. Bloomberg's Amy Morris has details.
President Biden, Secretary of State Antony Blinken, Defense Secretary Lloyd Austin, National Security Advisor Jake Sullivan, and CIA Chief William Burns are all now sanctioned by Russia. Russia's foreign ministry released a statement saying the sanctions should be considered tit-for-tat measures for U.S. restrictions and that the sanctions will block entry into Russia and freeze any assets there. Russian officials say the sanctions will not impede any high-level contacts if necessary. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Katie, it's 3:41 right now, but it kind of feels like 2:41 for me still.
And it makes sense because if we were having this conversation a week ago, it would be 2:41 p.m.
Even if we were having this conversation on Saturday.
Yeah, I mean,
I'm still getting used to it. I'm still writing 2021 on my checks.
Wow. I mean, we're pretty deep into 2022, so something to think about there.
Well, the reason I'm talking about this is because a news story crossing the Bloomberg in the last hour about daylight saving time becoming permanent under a Senate-passed bill. Americans would no longer need to change their clocks twice a year under a bipartisan proposal that passed the Senate on Tuesday.
Okay, so I was checking Twitter on my phone, and I thought this was a joke.
Yeah, one of our listeners got in touch with us, with me, in the last hour and sent me this story when it was a headline, and I must confess, I wasn't following it.
Yeah, I mean, I closed the app pretty quickly, but apparently this is real. So it's passed the Senate. I think it still needs to go through the House, but in any case, if this bill becomes law, its implementation would be delayed until November 2023.
Okay, a little over a year.
A little over a year. You got to give the airlines and other transit systems time to adjust their schedules. That feels pretty far off, but people have been talking about this, I mean, since I've been a conscious, sentient person, pretty much.
Senator Marco Rubio's legislation, that's who brought it up, would make daylight saving time, which most states observe. Not every state observes this. I believe Arizona doesn't.
Wow.
For 8 months out of 12, permanent across the country. This year, it began on March 13th. It's going to last until November 6th. Here's what Senator Rubio said on the Senate floor, quote, "Hopefully this is the year that this gets done, and pardon the pun, but this is an idea whose time has come."
That's pretty funny.
One thing that Democrats and Republicans can agree on.
Yeah, and he almost rhymed there, almost. So
He did.
We'll see. I'm excited to track this one.
All right, you're listening to Bloomberg Radio, and this is Bloomberg Business Week.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks holding their session highs, and we begin with a headline from the Bloomberg Professional Service. Ukraine and Russia will continue talks tomorrow. That's giving a lift to sentiment, with the S&P up by 84 points, up now by 2%. The Dow up 590, up by about 1.8%. NASDAQ up 351, up by 2.8%. Bottom line here, we are at or near session highs, 13 minutes to go ahead of that closing bell. 10-year yield now 2.14%. We've got spot gold down 1.7%, 19.17 the ounce. But perhaps the big story today, what's happening with energy. West Texas Intermediate crude down again today, dropping 7% right now, down $7.16 a barrel, now with a 95 handle, 95.82 on WTI. Barrel of Brent, the global benchmark, back below $100, 99.15, lower right now by 7.3%. Stocks are rallying as oil tumbles, and New York manufacturing data came in much weaker than expected, easing fears about more aggressive Fed tightening that could stifle economic growth. Earnings after the bell coming up. We will be hearing from the home builder Lennar. Williams-Sonoma also reporting will be Guess Inc. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It's the Drive to the Close. We are just over 10 minutes away from the close of trading on this Tuesday, March 15th. Stocks just coming down from their session highs. But Katie, we've got a great voice to comment on all things markets today and Fed tomorrow.
Yeah, Tim, I'm excited about that one. We're joined now by Liz Young. She is head of investment strategy at SoFi. And Liz, I'm excited to talk to you because I've been thinking about the yield curve a lot. I know you've been thinking about the yield curve a lot. And I'm curious, how much do you think that the Fed is thinking about the yield curve right now? Because if I look at the 2-10s yield curve, I see it at about 30 basis points, which seems very, very flat.
Yeah, I think about the yield curve more than I'd like to, honestly. and I think the Fed probably does too, especially at these levels. So as you mentioned, that spread between the 2s and 10s, I mean, it was below 30 for a period of time today. And I think that is a pretty fragile place for us to be heading into a hiking cycle. And the Fed may not care as much about the equity market correcting and some of the drawdown that we've seen, especially coming off of all-time highs. It probably felt like we had some room to draw down. But when you look at what happens with the yield curve, what you don't want to see is a true inversion. Now, the good thing about if we get close to inversion, it doesn't really count as a true inversion. That's a signal until it's lasted for a reasonable amount of time and it was a big enough spread of an inversion. So
how much? What's a reasonable amount of time, Liz?
I mean, this is an opinion thing, but I would say at least a month. I think it has to stay inverted for a month, and it has to be, let's call it 25 basis points at least, right? So sometimes you might get an intraday inversion where it just kind of dips below zero for a second and it comes back and it never really closes inverted, or maybe it inverts by a very small amount for a couple days. I don't think that counts as a true signal.
Okay, so help us think about this in the context of what the Federal Reserve board is talking about right now, the decision that we'll hear tomorrow at 2 p.m. Wall Street time, and what investors really need to understand about the tough task that the Fed has ahead of it.
Yeah, I mean, I do not envy the Fed.
Yeah, nor do I.
Situation. I think they are up against a lot of different challenges, especially because we've put, as investors, and when we talk about the economy, we've put so much pressure on the Fed to be able to solve a lot of the problems. And frankly, they don't have the tools to solve all the problems that we might have. So heading into this, when you look at really what their job is to promote maximum employment, and I think we can check that box, and control prices. So their main purpose right now is to get inflation under control. Now, what that means, though, is the piece of the inflation picture that they can control is really the demand side. They can't control the supply side.
So what they would actually be intending to do is to get demand to relax to the point where supply can actually meet it and inflation relaxes a little bit as a result. Now, I think some of the pressures come off because oil prices have come down from their peak last week, and we saw some of the moderation in PPI numbers today, at least the month-over-month PPI numbers. So that's promising, but we need to see more sustained relaxation in inflation. Right now, their hands are tied. They have to hike, and they have to hike into a period where markets are down.
And Liz, I mean, Fed leadership has made clear that they see hikes as the primary tool here that they want to use. But how do you think they use the balance sheet this time around in terms of, quantitative tightening?
Yeah, so the thing about hikes is that if they start and move too quickly or they go too big, it's all about the messaging. Move itself, it's about the messaging. And if the market starts to feel like the Fed is way behind the curve, it might get more scared than it already is. So I think with the hikes, they have to be gentle and they have to be gradual about it, and they have to message them very clearly, which Jerome Powell did in his testimony a couple weeks ago. It was very clear, very specific, surprisingly specific about wanting a 25 basis point hike tomorrow. I think we will continue to hear very clear messages from them about rate hikes. What they might do with the balance sheet is directly impact the yield curve. So if they start to feel uncomfortable with where the yield curve is or how flat the yield curve is, they may start to signal outright sales from the balance sheet rather than just letting assets roll off, because that may cause a little bit of a rise in longer term yields and get the spread between the 2-year and the 10-year to widen out a little bit.
And Liz, I want to switch gears a little bit and talk about the composition of who's trading right now, because we've seen a lot of reporting in the last couple of weeks that you have retail investors still buying stocks, but it seems like hedge funds and other larger players have been selling. I mean, if you balance those two forces out, first of all, I'm curious to hear if that's what you're seeing as well. And if you balance those two forces out, I mean, does it make sense to see, it seems like institutions are winning right now.
Yeah, what's actually surprising is that when you look at the flows that had been happening into maybe the end of last week, or let's say Thursday of last week, there hadn't been as much selling pressure as you would expect. But the last 3 days, there have been outflows if you look at sector funds and the money that's coming out of them. And just as a whole in the S&P, there have been more outflows. So this is going to sound strange, but it was kind of a nice confirmation because everybody was talking about being so bearish, but the flows weren't really reflecting that. And now the flows started to reflect that. And you've got other indicators like the put-call ratio that's been on the rise. You want to see some confirmation of that bearishness. Now, if hedge funds and institutional investors are a little bit ahead of that, as far as retail investors, that's usually how it works. So if there had been outflows from institutional investors before, retail investors start to, join that outflow party, that's where you get more confirmation of, okay, the bearishness is taking hold. Maybe you get to an extreme bearishness, and that's usually kind of where you bottom out.
Liz Young, head of investment strategy at SoFi. Liz, always great to chat with you, whether it's on Bloomberg Business Week Radio or joining Katie and me on Bloomberg Quick Take Stock at noon Eastern Time on weekdays. Liz Young, head of investment strategy at SoFi, joining us on the phone from New York City. This is Bloomberg Radio, and it's 3:55 on Wall Street.
The following is an editorial from Bloomberg Opinion.
As Congress has doled out almost $6 trillion in COVID relief funds, crooks and con men have lined up to get their share. They've created fake companies, misstated their earnings, and otherwise conspired to siphon off taxpayers' money. Last week, the Justice Department announced that it was investigating some $8 billion worth of fraud. The Secret Service estimates that $100 billion may have been misappropriated in total. What can government do to better monitor this emergency spending? A data portal that tracks big government outlays in real time would make it easier for officials to monitor for fraud and make more informed decisions about how to respond. Upgrading antiquated technology would also help. 80% of the federal IT budget is spent maintaining legacy systems, while investment in new ones often goes unfunded. Finally, the government needs to stop creating incentives for fraud. Community groups that steer federal funds to the needy are typically paid a fixed percentage of outlays in administrative fees. Such a system is simply asking to be abused. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
A big thank you to the Bloomberg Opinion team, David Shipley and the crew. OPIN Go on the Bloomberg terminal, also Bloomberg.com, and you can check out Bloomberg Opinion there as well. We are seeing a little bit of buying into the close. Katie Greifeld, though we are just coming off of session highs, the NASDAQ 100 higher, the outperformer today. The NASDAQ composite up close to 3%. The S&P 500, Katie, higher by 2%, and the Dow higher by 1.8%.
And you're right, you can see a bid really materialized about 2:30 and continued on all the way through 4 o'clock. We're not quite there yet, but it looks like it's going to finish pretty solidly higher.
Well, coming up next, it's Beyond the Bell, our cross-platform coverage of the market close with our colleagues from Bloomberg TV. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Gina Martin-Adams in for Caroline Hyde, counting you down to the closing bell on this Tuesday afternoon. Here to help take us beyond the bell. It's our global simulcast. Tim Stenovic is here. Carol Massar has the day off for some reason, but don't worry. Katie Greifeld, or at least the head of Katie Greifeld, is here to help walk us through the market close.
Yeah.
We welcome in our audiences across Bloomberg Television, radio, and YouTube. Guys, this is an amazing day here. Yeah. But we should point out, what was it, last Wednesday we had an amazing up day, and of course, we saw that get pulled back pretty quickly the following.
Yeah, well, that's the question, Romaine. I mean, some buying into the close here, but as you mentioned an hour ago, we've seen surges like this, right? We've seen buying like this in the last few months, and the question is, does it stick, or do we get new lows like we did yesterday?
Yeah, it's really hard to have conviction behind any one day. It feels like the narrative shifts so fluidly these days. But I will point that you did see volume edge lower today, at least for the S&P 500. Yes. I guess that makes sense as we head into Fed Day. Probably everyone has placed their bets.
The other thing that I would highlight is that earnings estimate revision has actually suddenly turned positive. This is something I was exploring earlier this week. For 6 straight weeks throughout earnings season, when the market was in the worst of the worst condition, we saw earnings estimates continuously going lower. That suddenly shifted over the course of the last couple of weeks. Something's going on in the earnings estimates that's provided a degree of solace, and I think that could be the catalyst to watch as we march our way toward that next event, which is earnings season after the Fed.
Before we get to earnings season, I know, Romaine, we're counting you down to tomorrow. We think about some of the catalysts for this market. A lot has been said about what sort of clarity, guidance the chairman can provide tomorrow with their full steam ahead with 25, but sort of signaling maybe like a smooth path forward. How do you think that the market can respond to perhaps maybe some more clarity that this market needs?
And it'll be interesting to see sort of what happens in the hours prior to that meeting, whether you see the same enthusiasm tomorrow morning that you're seeing right now. The Dow Jones Industrial Average going to finish the day higher by about 600 points, up about 1.8%. The S&P higher by about 89, call it 90 points here. We're going to round up about 2.1%, 2.2% on the day. The NASDAQ Composite going to finish the day higher by about 2.9%. And we talk about the Russell 2000 and whether some of those small cap cyclical names still were getting any love. They got a little love today, up about 1.4% here on the day. A relative laggard, but still a pretty strong day, guys.
Yeah, it's really interesting, especially the strength in the later part of the day and how sentiment shifted from the morning into the afternoon when it comes to the equity session. I got to tell you, a handful of companies in the S&P 500 and in the U.S. indices hit 52-week lows today, but a lot of those actually ended up closing in positive territory, like Allbirds, Virgin Galactic, and more. Beyond Meat as another example, just to give you an idea of the change in sentiment that we saw later in the day.
Yeah, and some of maybe those technical factors, Tim, that's really smart to point out as we move back to perhaps maybe some of the fundamentals as well. For our radio audiences, we do the sector winners and the sector losers, 2 steps down really here to get a more perhaps maybe informative view. And we talked a lot about the NASDAQ being the big outperformer, technology. Katie, that really was the tone here, right? Semiconductors, auto, hardware, software services, those are up anywhere from 3 to almost 5% on the day. You come down, there's only one sector in the red. A lot of the losers actually still managed to post some green. The one energy, of course, continues to be the energy sector as we think about this rotation, perhaps on a second day out of energy.
Well, Taylor, you mentioned that semiconductors, they were right up at the top. I'm going to kick off with advanced micro devices, AMD, because we really saw that broad rally in chip makers today. AMD led the way. Shares closed almost 7% higher. Biggest jump in a month comes after 3 straight days of losses. We also saw a big rally in the airlines, of course. That's after United, just one of several carriers that cut capacity forecasts for the first quarter. That helped United close about 9% higher. And I got to talk about AMC because we did get some M&A news. AMC CEO Adam Aron tweeted this morning that AMC, a theater chain, it's buying a 22% stake in Highcroft Mining. Not the most intuitive combo, but I mean, you saw AMC shares close 6 points. I would love to hear,
let's hear it,
your
Romain.
case for that.
How did Highcroft Mining do? Because at one point they basically doubled on the day, right?
They did, and I mean, you did see a lot of those gains come out of the stock. I'm looking right now.
They closed up 9%. Anytime I ask you a question, I already know the answer.
Welcome to Beyond the Bell, Katie.
Interesting that AMC almost closed higher. Usually you see the acquire drop on this news.
I love, you know what I love about Aron's comment? He actually, in the statement, he basically said, I think it was like the exact quote was like, I know it seems odd that a theater chain would actually buy a mining company, and then he goes on to state the reasons
Did you
why.
see the photo he tweeted, though? He had a great truck alongside him.
Yeah.
Well, that's great.
He made a visit to Northern Nevada to check that out. Kind of a challenge to find decliners when more than 88% of stocks in the S&P 500 are actually higher on the day. But we did talk about the decline in oil today, and that leading U.S. energy companies lower. ExxonMobil falling today by 5.7%. We also saw Chevron decline, Taylor, by more than 5%. And then Coupa Software, the procurement and expense management software company. This is an earnings story. The company reporting yesterday after the bell fell more than, close to 20%, more than 19% right now, hit a 52-week low. At one point having their worst day ever, falling to levels last seen in 2019. Down 80% from its highs in February last year. The company forecast revenue for the first quarter that missed the
And just to put a point on the chart that you had up earlier, Taylor, when we look at the decliners today, of the top 20 decliners in the S&P 500, 15 of them energy stocks.
Energy stocks. You know what I love about Tim is he doesn't try to entrap me with his questions. He actually comes with me with questions and gives me a heads up. You did that at the top of the hour, Tim, with the full faith and credit. I'll quickly just take you there as we wrap up where we closed on the day with mostly yields higher. What was interesting is this was a reversal. We had a big move up in yields yesterday. This morning, it was seeming that we were unwinding some of that, but something switched, Gina, where then today it was sort of that reflationary, inflationary narrative that continued. The 2-year yield, you're still down a basis point, but you're still hovering near some of those 2019 highs at a 185, and you're continuing to climb about 1 to 2 basis points on the day, though pretty much all of this doesn't matter until we hear from Jay Powell tomorrow, 2 p.m.
Yeah, and when you look at the internals of the market, there's something suspicious when small caps are not rising faster than large caps on an up leg. I also think yesterday wasn't really consequential. Normally, when you form a bottom on this big sentiment washout where no stocks are rising anymore. You can't find any winners in the market. Yesterday didn't give us that feel. So I think investors are looking at this as, is it just another dead cat bounce within a longer term downtrend? Certainly valuation opportunities have opened up here, but is it really the end of this sell-off is a huge question, and I don't think anybody has a whole lot of confidence in that idea.
Well, let's push ahead to a few hours from now, about 20 hours before we get the big Fed decision. And I am curious, guys. I mean, everyone knows, or at least everyone assumes, that they're going to raise rates, at least 25 basis points. But there's still some pretty aggressive bets being priced into this market right now. Is that not true, Katie?
I mean, I see about 28 basis points priced for tomorrow. I would have thought it would be lower than that, but I mean, that would be the ultimate shock if they did go ahead with a 50 basis point hike. That's been all but ruled out.
Yeah. What about details, though, when it comes to the Fed's balance sheet? I know this is something that Taylor certainly watches closely.
Do you know QE ended last week?
I do know, and I think that, was that on your birthday, Taylor, or was it just that we had a birthday cake?
It was. We actually ended QE on my birthday because it's like such a big
There's something
moment.
beautifully poetic about that. But what does it mean for quantitative tightening, right? And when the Fed actually starts to sell some of those bonds?
That's a good question. Well, and you've talked, and Mike McKee has nailed this, Romain. When QT, we don't have a real definition. Sometimes it's passive roll-off. Sometimes it's active selling. Now, the Treasury holdings are actually pretty short-dated.
Yeah.
Those could passively roll off. We're doing a great package on this. We'll give a shout-out to Aviel doing a package. The mortgage-backed security holdings, those were 30
Aviel,
years.
does she just go by her first name?
Well, we don't want to give away maybe her
Gina,
privacy.
in all seriousness, Gina, what do you think about it? I mean, what is QT? What is that even going to constitute?
No, I think it's a very good question. It's something we've been really nervous about, too, because is QT just runoff? Is QT actual active sales? And the runoff in and of itself could be effectively QT this time around because QE was so large and the Fed has taken such a big share of overall market assets. And we don't know.
But
the lack of
Taylor's
communication
point,
on this, I think, is this underlying source of nervousness.
Right. And I mean, hopefully we'll get some clarity around that. But to Taylor's point, I mean, it's mostly short-dated securities that would be rolling off. I mean, you have a vocal minority saying that they should be selling the longer-dated securities in the portfolio to take some pressure off the yield curve. But I mean, it seems like the Fed thus far, the leadership there is reluctant to do that.
Is no one calling Gina out on the phrase that she used?
What did I say?
Dead cat bounce.
Yeah,
There's
Katie
too many cat
winced a little
lovers
bit when she said that.
It was a little
naming it to a dead.
How have we not talked about the Senate passing the possibility of daylight saving time becoming permanent?
So when does daylight savings time go into effect?
Well, it went into effect on March 13th,
Yeah,
but
this
if this bill becomes law, November 2023.
I want to know what
So-
Jerome
Is that why
Powell
I've been an hour
has
late to the
to
show
say.
every day?
So it won't feel like it's 3:07.
So they
Wall Street
passed a
time
bill
right
to
now.
this to what? Change time? They're going to. How do you do?
We
that?
just get rid
Time
of
is a
Just change time.
construct, so
It's a
it
construct.
works.
All right, we're going to have to leave it there.
Someone's
Think
life-
about that
life
for the
is a
next
concept.
23 hours, guys. That'll do it for our cross-platform coverage for
Philosophical here on Beyond.
radio, TV, and on YouTube. We are going to be back tomorrow, same time, same place. Happy Fed Day, Bloomberg
Can you
Radio.
get Katie a bigger chair, please?
Yeah, we'll
I've
get
been
one in
asking
here
for
during the
one.
break. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio. I think sentiment is a good word to use, Katie. Look at the way that, we were just now. It sort of
Yeah.
reflects, I think, the market risk-on mood today.
Yeah.
But the question, as Romaine asked, and as, Gina Martin Adams from Bloomberg Intelligence pointed out, is this just a dead cat bounce?
Okay, we're back to using that phrase.
Yeah, I don't know another word.
Yeah,
to
it
use.
could be a dead dog bounce. I mean, again, if you look at
You're not gonna make any friends with that phrase.
S&P 500, every day it's a different color, red or green. So
Yeah.
it's, again, hard to have conviction behind any one day.
All right, well, let's get from New York City down to Washington, D.C. There we find Nancy Lyons standing by in our D.C. newsroom with an update. Hey, Nance. All right, we are going to work to get Nancy Lyons with us live from our D.C. newsroom. In the meantime, worth checking out what happened in the markets today, Katie. We saw the NASDAQ finish the day higher by 2.9%, the S&P 500 higher by 2.14%, the Dow Jones Industrial Average higher by 1.82%. You and I were chatting during the break because yesterday one of the superlatives that we used, Katie, was the decline of 20% from recent highs in the NASDAQ 100, bear market, right? And we actually saw such a bounce in the NASDAQ 100 today that the change from its high back in November of 2021 is only 18.8%, so no longer in bear market.
Exactly, yeah. And I mean, we've saw this happen once before a few weeks ago. You had the NASDAQ, if my superlatives are correct.
Composite, right? Or was it the 100?
I'm looking at it now. It looks
Okay.
like the NASDAQ 100, it was 19.95%
All right, we'll
below
call it.
its highs. Pretty close,
Can we
pretty
call
close.
it?
But, I mean, whether or not the superlatives are exactly right there, it's something that we've been towing on for, really weeks now. How far can this drop go? Looks like, we got as much as 21.3% below all-time highs yesterday as of closing basis, obviously above that now. But again, we were just talking about it. How much stock can you put into a single day in a market as volatile as this one?
Yeah, especially the day before Fed Day, where, as you rightly pointed out, volume on the S&P 500 was down about 6%, so relatively low. You're listening to Bloomberg Radio. Tim Stenovic, Katie Greifeld live in the Bloomberg Interactive Brokers studio. This is Bloomberg. It's Tim Stenovic and Katie Greifeld. We are live in the Bloomberg Interactive Brokers studio in New York. Katie, among the most read on the Bloomberg terminal is a story that I'm so glad that we are hitting on today. It was one of your gainers, AMC. I grabbed the wrong one, but I gotta bring it up.
Do you not know this story
I
by
do know
heart
this
by
scene.
now?
I absolutely know this story. It's all about AMC mixing popcorn metals in a bet on a miner. We are, of course, talking about the Adam Aaron run theater chain company getting into gold.
Getting into gold via a miner who mines gold and silvers. This is Highcroft Mining that we're talking about, based in Nevada, if I'm correct. And
Yep, based in Denver.
In Denver.
But this mine is in northern Nevada.
Right. Right. And so, I don't know. We've kind of been making fun of this all day, but we did have an interesting conversation with Mike McGlone earlier today of Bloomberg Intelligence, who made the point, maybe this makes sense as a diversifier. If you think of, AMC in MicroStrategy terms, I mean, MicroStrategy has acquired a ton of Bitcoin just to diversify its balance sheet.
Yes, but we are also talking about a CEO who has gone all in on retail traders, especially in regard to cryptocurrencies. So, as you and I talked about earlier today, it's pretty surprising to see a bet like this on physical gold when so much of the narrative over the last year around AMC and coming from AMC CEO has been about cryptocurrencies, because if there are two camps, right? You're either for gold or for digital gold. And people who are real bulls on crypto have a really hard, except for Mike McGlone, have a really hard time seeing the case for physical gold.
It is interesting.
Is that fair?
No, I think that's fair. I mean, to be so bullish publicly on crypto, and then, I mean, if you're investing in a mining company, you're kind of investing in the idea that gold is going to go higher. So he's hedged. He's hedged.
All right, a fun one to talk about and look forward to seeing what happens. You're listening to Bloomberg Radio, and this is Bloomberg Business Week.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Oil tumbled, stocks rallied today, and a widely watched manufacturing gauge came in much weaker than expected, easing fears about more aggressive Fed tightening that could stifle economic growth. The S&P rallied 89 points today, closing at session highs, up 2.1%. The Dow up 599, up 1.8%. NASDAQ up 367, a gain today of 2.9%. 10-year down 6/30 seconds, 10-year yield 2.15%. Spot gold down $35 the ounce, a drop today of 1.8%. Gold now at $19.15 the ounce. Crude, big move to the downside there. West Texas Intermediate now with a $95 handle, $95.10 on WTI, down 7.7%. Barrel of Brent down 7.8%, $98.68 a barrel. So again, recapping, equities rally, S&P up 89 points today, up by 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, tomorrow and today, we are, of course, going all in on the Fed as the Federal Reserve kicks off its policy meeting, widely expected to raise interest rates by 25 basis points tomorrow. We find out at 2 p.m. Wall Street time. We will bring you that decision live as it happens. When we talk about interest rates, we often talk about them in the context of equities, a lot of times really high-flying tech companies. And we've seen the way that those high-flying, growth names have been getting beat up over the last few months, as we have learned and really seen that the Fed will be raising interest rates in an inflationary environment. But what does it mean for small businesses? What does it mean for banks? Well, fortunately, we're joined by Frank Sorrentino, the CEO at Connect One Bank. It's a bank that is traded on the NASDAQ. It's got about 24 branches across New Jersey. Frank, how are you?
Great to be back, Tim.
Hey, great to have you with us. Hey, I wanted to just get your thoughts on, not thinking about this from a macro perspective, really thinking about it from a micro perspective, and thinking about your customers. What does a rising interest rate environment mean for the people who go to Connect One Bank, who use Connect One Bank?
We talk about this almost daily. I'm having this sort of conversation with clients practically every single day. I think the consensus, or at least the advice that I'm giving to most of our clients here at Connect One Bank, is that, the first couple of raises here by the Fed are going to be inconsequential. We are at a historic low relative to interest rates. If I would have told you 20 years ago that we would, that you'd have to live with 4 or 5% interest rates, you would have been jumping for joy. Yet here we are in a zero interest rate environment with an economy that's growing, mid to high single digits. So I tell people not to panic so much about certainly the first 100 or even 200 basis points of increases. The Fed's talking about a 25 basis point move tomorrow, and the expectation will be that there'll be 25 basis point moves for the rest of the year at each of the Fed moves. So that'll get us up 150 basis points or so. That is still historically a very low place for us to be with an economy that's growing the way it is today. And so I still think it portends a very robust economy generally, but also for our specific client set. We do a lot of construction, we do a lot of real estate, we do a lot of small businesses in and around the New York metro market. And so I believe that first set of moves are really not going to be that consequential.
So do you think that it will not have the effect of tamping down inflation? Because we know that the Fed has a dual mandate, stable prices and maximum employment. Prices are not stable with CPI at 7.9%, but sub 4% is where we're seeing the unemployment rate. So unemployment, by many measures, has reached maximum employment. So does that mean that it's going to take a while? If these are inconsequential to your customers, these interest rate increases, will it take a while for inflation to be tamped down?
Look, I think the Fed is a little bit behind the 8 ball here relative to the timing of these interest rate increases, and I'm not blaming the Fed in any way because, as we know, there have been a lot of macro events that have been going on that they've been monitoring, and I know they're data dependent, but certainly if interest rates rise 25 basis points, 50 basis points, 75 basis points, it's really not going to make a difference in most small businesses. That equates to incredibly low interest rates still, I mean, think about your home mortgage. You know, there are mortgage rates out there in the 2s and low 3s. If they go to the high 3s or low 4s, I mean, that is not going to tamp down the economy. I think we're going to need to see quite a bit more, or in tandem, I think we're going to need to see some of the liquidity that's in the marketplace be dried up. And to me, that's a more important issue.
Well, let's talk about it, because that's something that we've been talking about on the program for the last few hours. I mean, when does quantitative tightening come into play, where we actually see the Fed balance sheet shrink? Why do you see that as the more important piece here?
Because there's a lot of liquidity sloshing around in the economy right now, and there's a lot of stimulus. And that's really what's driving a big part of the inflation that we're seeing in the economy. It's a natural state of a lot of liquidity chasing not enough goods. And so I think the Fed dialing back on that liquidity, I mean, the Fed's balance sheet today is over $9 trillion. It doubled over the last 24 months or so. And so to me, that is way more dramatic than a 100 basis points move in the interest rate curve.
And I mean, at $9 trillion, I mean, realistically, how much do you see that balance sheet actually shrinking by?
Well, I don't know that it's necessarily the quantity that it shrinks by, because I don't think they can shrink it all that fast. But I think it's the jawboning around the fact that liquidity is going to start to dry up. You will see sources of liquidity that will no longer be available for people. Credit will be a little bit harder to come by. I think it will create situations where businesses will have to make decisions differently than they make today. I mean, just look at most banks in the economy today have record low credit losses. And I think that's directly tied to the fact that there's, just an unlimited amount of liquidity in the economy today.
Frank, we only have 30 seconds left with you, but what can you say about residential mortgages? We talk so much about rising real estate prices around the country. Will those slow down a little bit?
I think they will. I think for a lot of reasons, I think, the prices of housing has gone up, certainly in the market where Connect One serves. I think that in combination with interest rates going up a bit, the combination of both of those things will slow down the market a little bit. I still think it'll be a robust market as we get to the end of the year.
All right. Frank Sorrentino, CEO at Connect One Bank, joining us on the phone from New York City. Connect One Bank has branches throughout the state of New Jersey. You're listening to Bloomberg Business Week. Tim Stenevec and Katie Greifeld. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Katie Greifeld live in the Bloomberg Interactive Broker Studio. In just a couple of minutes, we are going to be talking all about how executives can emulate jazz musicians, painters, and other artists to respond to constant change and uncertainty. What we can learn from artists and apply those to our lives. First, though, let's get a check of what is going on in the markets today. What happened? A lot of green on the screen, Charlie.
Indeed. In a word, up or higher. The Dow, the S&P, NASDAQ all rallied today. Oil tumbled, and a widely watched manufacturing gauge came in much weaker than expected, easing fears about more aggressive Federal Reserve tightening that could stifle economic growth. Beaten down tech shares led the gains in the S&P 500. S&P up today by 89 points, up 2.1%. The Dow up 599, up 1.8%. NASDAQ up 367, up 2.9%. S&P, by the way, did close at session highs. 10-year yield 2.15% right now. Spot gold down 1.8%, $19.15 the ounce. Bitcoin today advanced 2.1%, 39,553. Perhaps the catalyst today for the surge in equities was the move lower in oil prices. West Texas Intermediate crude down 7.7%, 95 even right now on WTI. Barrel of Brent below $99 now, 98.46 for Brent. The global benchmark down today by 7.9%. Tomorrow we get the Fed's rate decision. Liz Young is head of investment strategy at SoFi. She was our guest right here on Bloomberg Business Week.
When you look at really what their job is to promote maximum employment, and I think we can check that box, and control prices. So their main purpose right now is to get inflation under control.
As for where it leaves policymakers,
right now their hands are tied. They have to hike, and they have to hike into a period where markets are down.
U.S. airline stocks climbed as the carriers said they will trim flying to remain on track toward profits even as fuel prices soar. Today, airline stocks advancing as a group. We had UAL up 9.2%, American Airlines up 9.3%, Delta up 8.7%, Southwest up 4.9%, JetBlue higher by 7.2%. Again, recapping a rally on Wall Street, S&P up 89, up by 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Particularly a big rally for those airline stocks today. Thank you so much for that update, Charlie Pellet. Well, there's a new book out. It's by the art advisor Maria Brito. It tells executives to emulate jazz musicians and painters to respond to constant change and uncertainty. Maria Brito joins us now. She's an art advisor, a curator, and an author, including the new book, How Creativity Rules the World, the Art and Business of Turning Your Ideas into Gold. She joins us via Zoom from New York City. Maria, how are you?
Hi, thank you so much for having me. I'm well with a beautiful day out in New York City. How can I not be happy?
It is a beautiful day today. Word on the street is Katie Greifeld even went for a run outside this morning because it's so nice.
I did, even though the sun rose a lot later than I'm used to.
All right,
but in any case,
that's you can talk to Senator Rubio about that. Okay.
I'll take the later days. I'll take the longer days. Yeah.
Well, Maria, I was really eager, and I am eager to speak to you. I think in the business world, and I think we often hear about the idea of poets versus quants and the artists versus the numbers people. Where do executives look to when it comes to making quick decisions? And why do you argue that artists are the right place to look?
Well, in the times that we have been living and experiencing, particularly in the past 2 years, we have had to experiment, pivot, and improvise. So I think that it is important for executives to look at strategies around creativity, the way artists do it, because there is one thing about artists that we can all learn from, which is how nimble their operations are, how quickly they are to react, and how unafraid they are to pose questions, look for answers in unusual places, which is something that a lot of people do not necessarily do. And if you happen to be doing the same thing that you have been doing, trying to obtain different results, you know, that's the definition of insanity, right? And I think that a lot of people do not necessarily look for the right places to either find a new solution or to see their problems from different angles. And so a lot of the things that I write in this book have to do with how to improve your creative thinking, how to really become an innovator instead of following the herd and doing what everybody else is doing. You know, it's a very difficult thing to innovate in an industry if you are following the mainstream or what everybody is doing. And you're never going to find the answers that you're looking for if you're just reading a trade magazine. And that's the truth. And so this book encourages people to look at their problems in business, their problems in their companies, in their markets from a very different perspective. And I think that's the value of this is if you keep looking at everything the same way you've done before, it's not necessarily going to be a place of progress.
Emery, you have data on your side here. In the book, I mean, you look at several studies, right?
Yes, absolutely. It's very heavy on data because I went after every study that I could look at and every publication, peer-reviewed, everything that I could actually get my hands around that confirmed many of my different points here. For example, the data that has been shared on LinkedIn for the past 3 years shows that 880 million professionals are talking about creativity as the #1 skill that they are looking for to have in their businesses. And actually, it is the hardest to get. And that discrepancy is actually frightening if you think about it, because being creative and innovative is nothing that is out of the reach of ordinary people. It's just that it requires a lot of skills that you have to hone on a daily basis.
Okay, Maria, we only have a minute with you for now. Then we're going to come back. We're going to do some more with you. But what would you say to somebody whose immediate reaction is, you know, I'm not a creative person. I'm somebody who doesn't think that way. How can they be trained to be a creative person?
Well, the problem is that creativity is not just for artists. Every new solution that you come up with that is built on the heels of what has already been done and that serves a purpose and is relevant for today is a creative solution. Everybody is creative. In fact, there have been so many studies that prove that, but we just put these barriers. And what I suggest to people to begin with is to start experimenting and asking questions that they have not asked before on the boardroom, on day-to-day operations. These are the type of things that actually bring the best results.
And that's what I want to get into. And we can keep going with you for a few more minutes, breaking down those barriers. I don't know. I just feel like, there would be some resistance to that. So talk to us a little more about, how people can break down those barriers and, recognize that I am creative, actually.
One of the studies that I quote in my book is one that was conducted by professors from London School of Economics, and they were hired by a variety of different tech companies, and one of them was lagging behind the competitors. And what they discovered was that there wasn't emotional safety in that company, so nobody could really speak up about issues, problems, the ideas that they had, the things that they thought could be implemented. And so if you're a manager and you're listening to this, just think about that for a second. How can you actually allow your people to speak up and to express the realities of what they are going through or seeing at work? And when you actually kill the original phase of creativity, which is having the sessions where people say whatever they are thinking about to figure out what are the ideas that they are going to end up taking. If you annihilate the first part, which is the freedom of expression, you kill the whole entire process of creativity. So I really encourage managers to allow this freedom of expression, no matter the industry, no matter where you are, if you really want to see enormous benefits around the ideas that you bring to the table.
Maria Brito, art advisor, curator, and author. Sit tight. We're going to do some news. We're going to come back with more. She's also the author of How Creativity Rules the World, the art and business of turning your ideas into gold. Katie, when we come back with Maria Brito, I want to go into history and try to get an understanding of the techniques that she writes about and how they've been used for centuries to help improve our lives. You're listening to Bloomberg Business Week Radio. Tim Stenivek and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. This is Bloomberg. It's Tim Stenivek and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Among the most read on the Bloomberg terminal this afternoon has to do with Russia grappling with taking home its $1.5 billion art in France. This story by Angela Rascou, Anya Nussbaum, and Sami Adkirny is all about how Russia loaned its famed collection to the art center set up by France's wealthiest man, Bernard Arnault, but it's concerned about the risks of getting it safely back home. On exhibition in Arnault's foundation, Louis Vuitton, since September 22nd, the collection includes such masterpieces as Vincent van Gogh's The Prison Courtyard, also Pablo Picasso's Acrobat with a Ball. Katie, the 200 works on display will need to be sent back to Russia when the exhibition ends on April 3rd, a matter that's complicated by transportation links being cut off.
Yeah, absolutely. I mean, the fate of the artworks, if you put them all together, they're worth at least $1.5 billion. It's just become another source of worry after Russia's invasion of Ukraine brought on a flurry of sanctions and restrictions against the country that includes super yachts, and as we know, it now includes art.
These paintings include the works of Monet, Picasso, Bonnard, Cézanne, and more. They were assembled at the turn of the 20th century by Ivan Morozov and his brother Mikhail, two wealthy Russian textile merchants who collected hundreds of impressionist and modern art works of art. Thomas Sado, who spent 15 years at Christie, estimates that the Prison Courtyard, the only painting showcased on its own room at the foundation, is worth at least $100 million. Others, such as Picasso's Acrobat with the Ball, are historically worth more than that amount, he added.
So French officials, they have acknowledged that there's a logistical challenge of sending the collection back since the EU has shut its airspace to Russian planes. However, they do insist that the paintings will not be seized because France abides by international law on the protection of artwork.
Oh, interesting.
Yeah.
That's a really interesting twist to this. Check this story out. It's available on the Bloomberg terminal. It's all about Russia grappling with taking home its $1.5 billion art in France. You're listening to Bloomberg Radio. Tim Stenivek, Katie Greifeld. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Investors are preparing for a Fed rate liftoff. Stocks advance. Today we get that Fed decision tomorrow, 2 o'clock Wall Street time. Complete coverage right here on Bloomberg Radio as you have come to expect over the years. Yes, Jay Powell's news conference live on Bloomberg Radio, 2:30 Wall Street time. Equities higher. Oil tumbled today. A widely watched manufacturing gauge came in much weaker than expected. S&P up 89 to 42.62, a gain of 2.1%. Year to date, middle of March, down now by 10.5%. We've got the Dow higher today by 599 points, up 1.8%. NASDAQ up 367, up 2.9%. Should point out stocks closed at or session highs. NASDAQ 100 index, the outperformer, up 3.2% today. Russell 2000 up by 1.4%. 10-year yield 2.14%. Spot gold down 1.7%. 19.17 the ounce. Bitcoin up 1.9%, 39,449 on Bitcoin. Perhaps the big market story today, the continuing retreat in crude. West Texas Intermediate down 7.8%, 94.97 a barrel. Brent down 7.7%, 98.62 on Brent. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet, Tim Stanovic, and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio in New York. I want to get right back to Maria Brito. She's an art advisor. She's a curator. She's an author. Most recently of the new book, How Creativity Rules the World, The Art and Business of Turning Your Ideas into Gold. Maria joins us once again via Zoom from New York City. Maria, Katie and I were talking during the break. When I was in graduate school about 5 years ago-ish, in orientation, we did, this is business school, we did orientation, we did actual improv training.
Those are very expensive improv classes. I'm just going to say that.
Yeah, I know. That is a really good point, Katie.
I hear you.
Yeah, that is a good point. I didn't think of it like that. But the whole orientation process is like a conversation for a different time because it's totally wild, and I think it's a little infantilizing, but I think they do that on purpose. Anyway, I want to talk about the improv portion of it because I always thought about it from the perspective of kind of an icebreaker and getting to know people, who you've never met before that you're going to be spending 2 years with. But you argue that this yes and language that you use with improv is really one that business executives, a way that they should be thinking.
Absolutely. And it is because the yes and technique, which was actually borrowed from Dale Close, who was an acting coach, is because it allows the conversation to keep going. And so when somebody asks you, can you do this incredibly difficult thing for tomorrow? You say, yes, and let's review the scope of that to see if it's possible. And so the important thing about yes and expanding it to other areas of your business is that it puts managers in a place of possibility, in a place where you can actually think about that there is a chance, that there is something you haven't considered, that you can actually continue that conversation in a different place and perspective that you didn't consider before. And this is something that a lot of people are so ingrained with their ideas. A lot of people sometimes are so fixated with just one answer that they miss a lot of what's happening in the periphery, a lot of what's happening that could actually bring an innovative solution to a problem, right? And we have had to really think so fast and react so fast always, but in the past 2 years, it's been accelerated. So what would it be if you throw this technique in your repertoire and instead of saying no, instead of dismissing ideas from your employees or your clients, you actually go with yes and.
And Maria, talk to us about how you've used that in your own professional life, because what's interesting about your book is you have a lot of, personal anecdotes in there.
Well, I get a lot of clients who come to me with incredibly difficult requests. Like, can I get this piece of art? And that I know is something really, really hard to get or almost impossible, right? So when those things come to me, I always say, yes, and let me see what can I get out of that, right? Because first of all, every client likes to hear yes, no matter who the client is and what industry we're talking about. So that allows me for a moment to actually figure out if I have an hour a day to find if I can actually fulfill the request from my clients. And at the same time, I have made my clients happy. So in my book, I talk about how a very important client of mine who lived in London at the time asked me to get her a Banksy for her husband's birthday. And I
First of all, that's
like,
a great birthday present.
Yeah, really.
If anyone needs any ideas from me.
Right?
Yeah.
Well, and so I Banksy is anonymous, and it's a prankster, is a provocateur. For people who do not know who he is, it's like a guy who has lived on this anonymity and he has thrived in that position. So I said, oh my God, how am I going to make her happy? She's very important to me. And so I said, yes, of course. And let me get back to you soon about that. And I just closed my eyes and went with like my intuition for like 10 seconds. And I remember a street artist from Brooklyn, and I sent this person a message and I said, do you happen to know Banksy? And, because I was like, does Banksy even exist?
Yeah, that's a fair question. I have that question.
Right. And so this person go back to me and say, why? What do you need? And so I explained the situation. I said, the client is very important and she's looking for this. And the artist in Brooklyn said, look, give me a second. So it was all about, everybody was sort of like doing yes and at the same time. If you think about this, it was a chain of events where everybody was like, yes and. So in about an hour, I got an email from the artist introducing me to Banksy's manager in East London, a very fun woman in East London. And after that, things sort of happened. But if I would have told my client from the get-go, are you crazy? That's impossible. Nobody can ever get a Banksy.
You were able to use this technique.
Right. And so I encourage people to do it.
Maria, I'm wondering, after researching this book, you're digging through the data, you're going through historical examples, you're using your own anecdotes, your own expertise. What's one way that you've really changed your life based on this research?
I think spending time alone and in silence is a very important thing that people underestimate. And I also bring examples that are so crucial. For
Do you mean time alone, away from your phone, away from Twitter? Just
away
sort
from
of
everything.
Meditating? How do you mean?
Well, the word meditating has such many different connotations. A lot of people like it. A lot of people don't. Yes, I like the idea of meditating, but if that sounds too heavy for people, I would appreciate if you can look at it as more like 10 minutes to think. 10 minutes to close your eyes and think, no music, no noise. And it's not just go for a walk, because a lot of people are like bargaining that with me sometimes, like, well, what if I go out for a walk? No, because when you're walking, you have to pay attention to where you're stepping so you don't fall. And if you're in a city like New York City, you can't really just like walk aimlessly, right? Because you're going to get hit by a car.
Yeah.
So, the whole thing is about allowing your brain to have a moment of calm and allow for the ideas to marinate. And I do bring the examples of Steve Jobs, who, as you know, was
a big meditator, yeah.
Yeah, he was a huge proponent of Zen meditation, and he told Walter Isaacson when Isaacson was writing Jobs' biography that the monkey mind is always going to be chattering, is going to bring things that are going to distract you from your goals or from where you're going to find the next solution.
I think I shared this before, but I have a friend who actually keeps a notepad in the shower because that's where he comes up with great ideas, because he's like not distracted by his phone or anything like that.
I have a lot of logistical questions about that.
Yeah, it's like waterproof. Maria Brito, art advisor, curator, and author. She's the author of How Creativity Rules the World, the art and business of turning your ideas into gold. It's Bloomberg Business Week. For Katie Greifeld, I'm Tim Stenevec and the entire team here at Bloomberg Radio. Have a good night.